All right, welcome back, YouTube. So I wanted to do a price update just because of the amount of emails and stuff that we're getting. And I don't know why people expect, even when you have a transition in the market, even when the macros are starting to align, I don't know why people expect assets to go straight up and not have consolidation points or even take breaks like we talked about, but they do. And we're going to dive into that. I'm going to show you how, even if you look at a Doge, a BTC, even like an Ethereum, you'll see that nothing has happened that is like abnormal. Even if you take a look here at the chart that I had before, you'll have these consolidation points where you have the run and you'll reach down, grab some liquidity, run, reach down, grab some liquidity, and repeat. And even if we're talking peak bull market, well, peak bull market will just be kind of just a straight moonshot, and that's kind of how you know you're getting toward the top, or at least for a deep correction. But technically speaking, if you are still in the healthy part of the cycle, and I'll say this, and I'll try and choose my words carefully because there's levels to a bull market. There's different cycles, and there's even cycles inside of the bull market. When you are in what I would call the healthy part of the excuse me, the healthy part of the bull cycle, you'll see these points. This is what you want. You want a increase, you want a consolidation, increase, consolidation. As long as you are not getting like full retracements, like if you are here like around like 1016 for Doge, for example, and then you swing down here to 6 cent or something like that, like a straight drop off of a cliff, then this is technically what you want. This is, even if you're saying, okay, where do I still want to accumulate? I'm not, I know we're not peak bull market yet. Where do I accumulate? These are the areas you target, not these, not these. These are the areas you target. Okay, where we most likely grab some liquidity from. And you can, and just so you know, I'm not being biased, let's take a look here at BTC. Take a look here at these time frames here. You'll have these wild swings, like, because even with Bitcoin, it's going to move. The dollar amount is going to be a lot more, even if it's not necessarily reflected in the visual of the candle. But you'll see these days where the the bears kind of take over, and then you have the bulls kind of just grab that liquidity back up, and whether it's this big spike here, coming down to the 14, and you'll see we have the green day, and the next day it gives up like almost 100% of the gains that it had the day before. And then you have a big red day where it drops, and then it gains back 100% of the losses of the previous day forward. And you have this liquidity battle here. Where is the liquidity going to come from? Is it going to hold here, which is around like the 14 day, grabs that liquidity, goes back up. Then you have this big drop here again. Big sell-off here, taking not necessarily filling a gap here, but you will have this big sell-off. Actually came down to almost threatening to break back into the 30s range. And then we had some big push up here back to around the 14, some battles here, and now you're trying to grab that liquidity. That's really all this is. You're searching, the assets are searching for where that liquidity is going to come into the market. It's not saying that, oh, well, it's going to be a major breakdown. I'm not saying that can't happen, but technically speaking, you're searching for where the retailers, the institutions, where they want to buy, where are they looking for? Same thing here with Ethereum. Big run up here, consolidation point, big, huge candlestick, sell off. Consolidation point, big run up, sell off. This is what you want. When you start getting these candles here, when you start identifying this here, and this candle just turns into like the Empire State Building, then you can expect those huge sell-offs here. This is nothing to, even if you take a look at the year today, I posted on Twitter and in the community section, Bitcoin's, I think, is up like 145%. I think the only thing that's beating Doge is like the NASDAQ. Doge is beating the S&P 500. Even right now with this pullback, it's still up over 30% for the year, beating the S&P. I think the NASDAQ is maybe like 45%, something like that, which is slightly higher than for Doge, but it's beating bonds, several other crypto, several of the major markets. I really think it's the only Bitcoin and the NASDAQ 100 that was on that list that was above Doge. So Even if you're looking at that, I want to say, if I'm not mistaken, is it higher than Ethereum? I don't want to misspeak, but I believe so, but I'll have to check or maybe Ethereum wasn't on the list. But either way, you get the point that you are still looking at the overall trend of the market, and it's not, having a sell off or consolidation period is not indicative of the entire trend changing. You're going to have evidence of that with things like reversals and breaking through floors and stuff. But you can't just say, "Oh, it's a period. It's been moving sideways here. The momentum's dead." That happens. That's Ethereum right here. I can show evidence of this, and Bitcoin, and this will continue to happen. Brace yourself. This is from October 20. What is this? 24th through November 8th. It was pretty much trending sideways, and then again, really from, let's see, November 10th through November 30th, it was trending sideways. That's 20 days in here. This is 20 days of price movement, up, down, up, down, up, down. No real gains. If you bought on the 10th versus the 30th, it meant very little in difference as far as for price or what you came in. You were just on a roller coaster up and down, or that little forget the name of the roller coaster, but it takes you up and drops you back down. That's what you were doing for 20 days. And you have to, when you start seeing these things, and like, I'm not trying to lecture anybody, but when you see these things here, that's not if you're going to invest in these cycles, you can't be detoured by these liquidity pools, these sell-offs in the market. People are going to take profits. Not everybody is holding long term. There are some people here that are simply looking to get 20 to 30%, and then they're going to put their money elsewhere. There's some people who are in crypto right now who could care less about it and simply want 20 to 30%. And because they don't trust it, they're going to take profits. And you're going to see these major sell-offs. And these are not people with 5-10 grand inside of the asset. These are people with multiple six figures, sometimes millions of dollars, who are simply looking for a quick 20, 25%. And they're good. So you can expect this to happen, especially even more so at higher levels. And if you see this like, oh, Doge is struggling with 10 cent and Bitcoin is struggling with, 45K, there are major resistance points between these coins and their previous all-time highs. This is not something that's going to be a smooth ride where you just wake up one day and Bitcoin shoots from 44,000 to 70K. That's not, Doge's not going to shoot from 10 cent to 80 cent in one day. There are many major points here between these options. I think even before Doge gets to 30 cent, I think there's like 4 major levels that it has to break through. And just going off memory here, Bitcoin, yes, of course, obviously 45 is another big one. Really, right now for Bitcoin, every 5,000 is going to be very, very major here. So you have 45, you have 50, you have 55. Those 60 is going to be huge. So yeah, another 4 for Bitcoin. And you can look at the retracements, go back and look at the charts from 2 years ago, and you can find evidence of everything that I'm saying if you want to validate that. These are going to be major points here that's going to require a lot of capital to push through. And that's the nature of the bull run. When you get in there, you'll see that this is how you'll start the FOMO. Once you start breaking through those levels, people will look at these charts and they obviously will have a lot more institutional capital in this time. But we're using this for an example, you'll have something like this. It'll be a lot more exaggerated at that time. And you'll have people coming in trying to swing because the gains will be a lot easier. And the question will be how high it will go. And then you'll start seeing articles of the targets and stuff. You'll see Bitcoin's going to 100K, and this is going to ease the comfort level of people buying it at 75. You'll see Ethereum to 5K or 10K. This is going to ease the comfort level. You'll see the Doge to $80, and this is going to ease the comfort of people buying it at 50, 60 cent. And you'll see this new capital coming in, and that's when the bull run kind of catches its second wind. And then you'll start trending toward ultimately when it gets exhausted, and then obviously the bull market will peak. That's the cycles of the bull market. So we are still in a very healthy part of the cycle here. We're not in the explosive gains portion of the bull run here, where we are waking up every day and it's a new all-time high, and it's like, oh, it gained X amount of billions of dollars. There will be periods, yes, where large cash will come in And then more than likely, you'll see like a retracement there slightly, but ultimately you'll start trending in that direction and you're building the momentum up. That's typically what Bitcoin does the December of before every halving. You can go back to like 2012 and you'll see if you look at like around November, December, right before the halving, you see the capital start coming back into the market. That we're right on schedule for everything that has happened before. So nothing abnormal has happened here. So just kind of keep that in mind. You're looking at it. Shorts have been very for Bitcoin, not so much. Let's see. I don't believe if I can spell. I'm adding more wrong letters. Okay, so for shorts, Bitcoin, not so much. Over like the last week or so, had some increases for sure. But let's see, 4%, 11%, nothing huge. Doge, obviously, with that 10 cent, we know how people freak out, and especially shorts when Doge is in double digits. So they do whatever. I talked about this earlier this morning. Last week, we had 2,622% increase in shorts. And the next day, we had like another 32% in sell off of around 20% and another 20%. So about 40% of that had sold off. So there's still about 60% in there, a little over 500K, a little over 6 million coins if you want to break it down that way. So this is not abnormal for Doge. You know, it will see like what is this here? Like a 1,000,000% increase here. So it's not. You just expect more of that. These shorts to kind of come in, especially as we start getting toward that 12 range. But during those consolidation points, when they don't, and we talked about this during the overall momentum, they're not going to. It's very rare that they'll jump in and try and fight the momentum. What they're looking for before they start shorting is periods of exhaustion where the capital kind of dries up and they say, okay, this is our time. This is where we're going to get less resistance to actually push the coin down. So whenever that capital, whenever the coin starts searching for that liquidity, it's like a battle strategy. That's the best time to actually attack it because you're more likely to be successful when the train is slowing versus when it's going full speed ahead, and you get yourself in a position where you get wrecked, and nobody, no investor wants that, no matter what side that you're on. So just kind of expect that every time there's that liquidity pull around these major pivot points, you're going to see a increase in shorts, and as it goes higher, probably even news articles saying that this is the top and stuff like that. So let's kind of expect that to continue. That has been a trend around any major events, major runs. So this doesn't even surprise me. So I think this will ultimately continue. So just gonna give me a price point here, and then I'll do Bitcoin. No, not shorts. Here we go. So ultimately, this zone here, working out this zone, this is kind of established itself as our next breakpoint as far as we're getting, even before we get to like 11 cent, somewhere around the 1070 range. We are searching for that liquidity here. No evidence. We had a strong. This is a decent hammer here. This is certainly a strong push off of that high 8 range. We'll see today. We didn't even threaten to come close to it yesterday. We'll see where we are today. Today's looking like it's going to be a green day. So this could be the bottom here, and we'll be playing in between the high 8 range and the 1070 range, which is something similar. It'll kind of form like this little. It's not a bad shaped bowl, but something similar to what it did down here, without the full retracement. What is this? From 726 and ran to 876 and then back down. So even if we kind of rejected roughly around the same thing, so basically you can kind of say it did. We just didn't close there, but it ran down to like the high 8 range, which is kind of filling this here. Technically, you can say it did here. It just didn't close, and to grab that liquidity. So we'll see, because this is certainly some liquidity made here. This is probably the biggest wick since we had this push down out of this zone here when we were first breaking into it. So this is something we've done before, but the question is just kind of where that liquidity is going to come from. So hopefully we'll establish that over the next few days, and we'll either branch out or have a retest into this area. Until there's a large move of capital in the market, I doubt that we'll re-challenge this within the next 48 hours. So probably we're looking at another three days or so. Ultimately we'll see where we close at, because if we close in this zone above the 957, that can kind of give us an idea of how strong this is, and hopefully we'll see the 14-day. It won't act as kind of like a resistance points, and then obviously we have to keep in mind the shorts and make sure they're not spiking to try and control that price out of that zone here, because that puts us in position for the double digits and going toward the 11-cent marker. Here for Bitcoin, obviously this is that 45 has been the Achilles heel of Bitcoin right now. You have many slap downs here. 1, 2, 3, 4, 5, about to be 6 if we don't get it today. So 6 rejections here off of that 44 mark, trying to get to that infamous 45 before you can open up that next zone here. So again, nothing abnormal. We've seen even when he's coming here, like even before he broke out of the 30 range, it bumps his head a lot before it does that. Sometimes with very minimal price movement on the day before it's able to grab that liquidity and go to the next level. So ultimately, that's kind of where we are. It's kind of the tone of the market here. Is this search for liquidity or the sideways action while we wait for the liquidity to come into the market. But again, nothing abnormal has happened where it's these major sell-offs and you're having to reach down two prior zones to grab liquidity and stuff like that. That hasn't happened. So nothing to justify the threat that I'm seeing on X and in my emails. Ethereum, to the downside at least, is doing very well, holding its own at the 2100 mark. So very impressive. This is a perfect example of previous resistance turning into support. As perfect example there. Can't ask for a better setup. So ultimately, same thing, looking for that liquidity coming to the market. Nothing abnormal happening here. So I hope I did. This video ran a little longer than normal. Hope I did a great job at kind of explaining the tone of the market, technicals, and the shorts coming into the market, and how they kind of blend together, and we get the price action that we see. Hope this was informative. Hope this gives you a better understanding of the tone that we're in right now, so we can focus more on strategy than fear and hopium. That's ultimately what this channel is about. No fluff. So appreciate all of you guys. Thank you guys. Appreciate all the new subscribers. Appreciate you guys for sharing the videos and getting it out there. I think that we're going to be a beacon of information here on the next cycle. So I'm really grateful for that and thankful. With that being said, if you have any comments, questions, leave that in the comment section and I'll get back to as many of you as possible. I appreciate all of you, and I will see you guys in the next video.